All right. How's it going, everyone? Alec, can you hear me?
Yeah, what's going on?
How's it going, man?
Doing well. How are you doing? How are you feeling?
Um, my wife's still hacking up a lung. She's going to the doctor finally after like a week and a half, almost 2 weeks of being constantly sick. She's been hacking
Man,
up lungs. Yeah, it's been pretty rough. But
how are the
yeah,
kids?
they both kind of got it, and then they've been pretty good. It's just her and I that keep kind of passing it back and forth, I think, to each other.
Yes. Is it COVID or is it just
No,
like
it
a
was just a regular, like, run of the mill kind of like
yeah,
we got, she got ear infections, and uh I got slate ear infection, then mine cleared
yeah,
up pretty much, but she's got like been hacking up mucus for days, and it's like
man.
yeah, how's it going?
With us, it sounds like better than that. Yeah, no one's sick. No, I mean it's going well. We're sort of grinding away. We were expecting a big slowdown the week heading into Labor Day and then sort of the week after, but we've had some good activity actually. So we're pretty encouraged, and we're making some good progress on some feature updates, getting some signing, like some onboarding flow stuff figured out, doing a couple things to the product itself. So, good stuff coming from us.
Oh, good stuff. All right. Hey, Andy, and hey, John. How are you guys? Welcome to the stream. We've got Alec on, the CEO of Optionality. You guys can say hi to him too. I don't know if are you able to see this the comments.
No, I'm so
If you
maybe
pull
if
up
I click
YouTube,
on
yeah.
yeah.
Can you guys hear him okay? Just want to make sure I did this right. Is the volume okay on both of us? So right now it
Yeah.
looks like we got Andy, John, Jonathan. Okay, good stuff. They can hear
Awesome.
you too. Good stuff. Yeah, so I was gonna say, have you guys added that feature where, like, if you like max out on like a trade, it would automatically like sell for you?
No, so we sort of got to a point there. We got to a decent point. We were testing it out a little bit in our staging environment, and then we decided to reroute some of those efforts into some of the more back office stuff with
Okay.
Apex because we were getting a lot of like really really manual, just sort of brokerage operation stuff that was falling on my plate.
Okay.
That like wasn't going to scale past like many more users than we had.
Sure.
So it was sort of like a fire drill that we had to stop and redirect. And honestly, in conversations with a lot of our current users, that was not something that was super, super high on the totem pole. So that was sort of another reason. But we have a lot of that logic built out. It's just sort of a function of
Yeah,
when we're going to be
when it
able to
makes
sort of
sense to
allocate the resources.
implement it, because
Yeah.
that would be super cool for us, because obviously as the users, like, some of us may not watch it 24/7,
Yeah.
and so being able to like lock in, it's like, okay, well, that's the most I'll ever make on this. So
Yeah. No. And I think finding out the best way operationally to do that, I think the way that we wrote the logic, I think it's in a pretty good place. But that's a pretty big lift. So I don't know. I wouldn't say it's coming soon, but I would say like hopefully we'll get back to testing it soon. We'll be able to test it on some live trades.
what's up, Adam? How are you, bud?
Yo, what's going on? How we doing?
Doing well. We were
It's
just
been a minute.
Yeah, I was gonna say we've been sick over here in my house. How about you guys?
Yeah. I hope everybody's doing a little bit better now.
Yeah, my wife's still hacking up a lung. I can hear her right now.
Oh, jeez.
She's been sick for like almost 2 weeks now, so she's going to the
Oh,
doctor
man.
tomorrow.
Brutal.
Probably get some, antibiotics. She's had like
Wow.
ear infection for like a week.
Man, I'm sorry to hear that.
Nah, it's
Nothing
fine.
like ending
She's
summer.
she's
Nothing like
okay.
ending summer that way, right?
Well, kids are back at school, so bringing all the germs in.
Yeah, exactly. Exactly. No, I mean, everything's good over here. Just, plugging away per usual. Got a big week next week, actually getting married next week. So,
Yeah, congratulations, bud.
yeah, I appreciate it. So I'm shutting everything down Wednesday evening for
Yeah,
the
for the
weekend.
wedding, right? Yeah.
Yeah. So excited for that. And just doing all the final things with that. It's kind of crazy in its own right. So, yeah.
You guys doing it in Philadelphia or?
we're doing it in the like towards the Jersey Shore, so it's kind of like 30 minutes from the shore inland.
Very nice.
It's in this area, like kind of like the Pine Barrens area.
Okay.
So it's pretty cool. Yeah.
Very good. So pretty area out there, right?
Oh, it's awesome.
Good for some pictures, right?
Yeah, absolutely.
All right. So we got right now, looks like about 14 people in here. Let me go ahead and put out a blast on the because I'm starting earlier than I normally do because I've been kind of pushed back because of everything. Let me go ahead and put down on announcements that we are live and put the link.
Hey, you know what? First night of NFL football might be competing too.
Yeah, I was gonna say
a bigger budget.
Unfortunately, I have Cam Akers, and last time I checked, it was like the second quarter, and he has 0.
Yeah.
Oh man.
I don't know what's going on there. I was like, and that was like my second running back off the board.
Oh, jeez.
I know. Trust me. So I had the 5th pick. I don't know if you guys play fantasy, right?
I used to, and then I haven't played in a year or two.
Yeah, I was going to say I used to, and I just have like 0 time.
Yeah, I was going to say you guys are pretty busy running a brokerage, right?
Yeah, it's like kind of a lot.
Yeah, so I had the 5th pick. So for me, I went wide receiver. Justin Jefferson was available, so I grabbed him. But then the second round, they went on a run for running backs, and so I ended up with Chubb. And I'm like, okay, that's not like great. And then like the next round went by, and I'm like, well, I either grab a tight end or I grab another running back. And at the time, Cam Akers was the best available, so I was like, all right, I'll grab him, even though he'd been banged up. And yeah, it looks like they're not really playing him. Or at least that's what it looks like on last time I looked. Cam Akers,
right.
Yeah,
just getting started though. He'll be all right.
Yeah, does he even have a carry yet? He has 1 attempt for 0 yards.
There you go, getting him to rock a little bit.
Yeah. Oh boy, this is going to be a rough season. I can already tell. All right, so let's do this. Let's put out the blast. I've got the YouTube channel here, so we'll go ahead and hit that to everyone. All right, get it going. All right, so we're live. Gonna go. All right, get it going. Oh, I gotta shut this down. Hold on. I just need the link. Did you guys hear that echo?
No.
Okay.
No, I didn't.
I think it was just for the YouTubers.
Okay.
Okay, I think we're safe. I turned it off. All right, so let me post it in the Discord real quick and say, to everyone, YouTube with the optionality, guys. Yeah, so do you want to let me do this. Let me give you the option to, you guys can share now your screens if you want to. If you want to show like a demo real quick while I kind of blast this out to everyone. If you want to wait till we kind of get a couple more people in here.
Yeah, I mean, we could wait a couple minutes.
Okay.
It's not a problem.
All right, so anyone inside the Discord or YouTube, do you guys have any questions for these guys while we're waiting? Optionality, guys. The CEO and Adam, what's your role? Is it CT or C? What was it?
Assistant to the CEO.
Janitor.
No, for real though, it was a
CRO.
CRO. That's right. Okay,
Yeah.
CRO.
But, and yeah, we'll kind of bookend it, like sandwich it. So, as we had kind of talked about, we'll do I'll post it in the Discord now as well. We're actually doing our largest promo ever tonight. We appreciate you guys coming out. And so I'll say it now and then we'll say it at the end. We're doing a $40 first trade promotion tonight. It worked out pretty well last time. So in terms of like the Google form. So that was pretty straightforward way of just like tracking it. So that's like a pretty easy way for us to do it. So we'll go ahead and repost that link, and I'll put that in the in the main trading or wherever, in the announcements or whatever's easiest for you guys.
Yeah, well, I'll
And
give you
then-
a spot to put it in the announcements.
And I'll just throw this graphic in announcements. Actually, I can't put it in there.
Yeah, if you want to send it to me, I'll put it in there.
Yeah, no problem.
So anyone that's listening live, if you haven't signed up already to Optionality, you're more than welcome to. You get a $40 if after you place your first trade. So they're running the promotion, and let me go ahead and see. Did you put it in? Oh,
Yeah.
I see a mention.
And
Okay.
then I'll put the link as well.
Okay, let me copy that real quick.
Little juicy one for you guys. Let's see here.
All right, here we go. We'll do that there, and we will push out that also in the. I think we started some sort of like discount codes. We'll put it in there as well.
And this is, you can post this under it.
All right, there we go. So we'll see if we get any more people on, and then let me put it on Twitter as well.
Awesome. And yeah, I can go ahead and get started now. And just saw the question come in. So I guess sort of the way that we're going to go about this. So we're going to go through. So we've been getting a lot of questions from some of our users, just really around like basics, like very basics of even down to like, what does a call or put option represent? What are the different components, stuff to watch out for? So I'm going to go through just sort of like 5 to 10 minutes of just sort of running through some of the basics of options. We'll definitely get to kind of the strategies that we use, how we come up with those strategies, how we present them, the different risk levels, that sort of thing. So I'll stop every like couple minutes or so for questions. So if anyone has questions, feel free to post them in the YouTube. I'll do my best to answer kind of as I'm going through things, and then we'll also do sort of questions at the end for anything that's even related or just things I didn't cover or things of that nature. So I don't have anything in terms of material to share screen-wise, but then once I'm done, once we kind of have the question part out of it, Adam is going to go through like a product demo. So
Okay, yeah, good stuff.
Yeah, so I'll get into it now then. So in terms of, I'll just start at sort of the very bottom rungs of the ladder, the very basic, like what is an option? So call option, put option, the option in and of itself is essentially the right to buy or sell at a certain price at a certain date in the future. So it's a contract between you and a counterparty. There isn't any counterparty risk or credit risk, however, because all contracts are guaranteed by the OCC. So when you enter into a options contract, there's no potential that someone's going to default or anything like that on you. Everything is guaranteed. So a call option is the right to buy a stock at a certain price, and we're just going to go through equity options. The right to buy at a stock at a certain price at a certain date, and then a put option is the right to sell. So you would use a call option when you want to, when you think the stock price is going to go up, and you would use a put option when you think the price is going to go down. Each option, so each single contract represents the right to buy or sell 100 shares of stock. You can do as many contracts, you can do however many contracts your brokerage allows. So, you just continue to multiply by 100. So 2 contracts will be 200. And so that's kind of one of the nice things about options is that they allow you to access leverage. So you're not paying for, what 100 shares of stock would cost. You're just paying for what, 1 or 2 contracts of the actual option would be. And you can buy or sell an option. So if you're going to, using a call option as an example, if you wanted to buy a call option, you would be bullish on the stock, but you can also sell a call option, which means you're actually bearish on the stock. There are downfalls to selling options. Those are a little bit more sophisticated and advanced strategies. Not everyone has access to those because they do come with different risk parameters. We can go through a little bit of those later. But yeah, so moving into kind of the different components of options. So there's the strike price. So that is the price that you agree to either buy or sell at that certain date in the future. So if a stock is trading at 95 and you say, I want the right to buy it at $100 in a month, and that stock trades all the way to $150, well, that strike price is 100 that you agreed to. So you now have the right to buy it at 100. So that's the strike price. The expiration date is the date that the contract expires or becomes invalid. So expiration dates for most stocks are on Fridays. There are some ETFs that have like midweek expiration dates, but most things are on Fridays. So after that,
like SPY and
SPY, Qs, a lot of the ETFs or index options will have I think they have like Monday, Wednesday, Friday. But most expiration dates are on Friday. The bid and ask is essentially what the market makers are quoting for that option. So if something has a really tight bid ask, it might be $1.20 by $1.22, which means they're willing to buy the option from you for $1.20 and they're willing to sell it for you for $1.22. And it's essentially their risk premium for quoting that and providing liquidity. So they essentially make the difference between those two. And as a result, they are willing to provide liquidity in the underlying option series. There are in options that are less frequently traded, you might see a much wider bid ask spread. And that's something to be cognizant of, because you want to sort of stay in the middle of where those two are, because if you're constantly buying, if the bid ask spread is $1 by $1.50, and you're paying $1, you're buying it for $1.50, and then if you wanted to sell it immediately, your only liquid market is at $1. You want to be really cognizant of trying to stay in the middle of those two. So staying close to $1.25 in that scenario, or what we call the midpoint. That's a pretty important component just of options pricing. Volume is something where it just essentially represents the amount of contracts of that one series that's actually traded hands throughout the day. So that's active trades of that contract throughout the day. Whereas open interest is another popular metric, which is just how many of those contracts are actually held. So if I buy an option today on a Thursday and don't trade it tomorrow, that still counts as one contract of open interest. Then if I were to sell it tomorrow, it's still one open interest, but now it counts for the volume. So that's sort of the difference there. And then one question that we actually get fairly frequently is the differences between like buy to open, sell to open, buy to close, and sell to close. So when you are buying a call or put option, then you are putting on a buy to open position, or if you're buying one of them, you're putting on a buy to open position. If you're selling one, so if you're writing an option, then you're putting on a sell to open position. But those are both opening transactions. One's to buy the option, one is to sell the option, but essentially be short the option. Buy to close is if you have a short position in an option and you want to buy it back to close a position. And then sell to close is the opposite. If you hold a long call or a long put and you want to get rid of it, you would sell to close that. So those are sort of the differences between those four. Before I get into some of the more nuanced things to watch out for, any questions there on just on some of the basics, or we can move on?
All right, we're going to give you guys a second to actually write out some stuff, because I'm sure there are some questions. But
Sure.
One thing I just want to point out was what he was talking about, the buy to open, buy to close. Those are obviously, some people get those mixed up. And that does matter, because you can literally go the wrong way on a trade, which I've had people go, well, I don't understand. I sold this thing, and I'm like, did you buy or sell it? And they're like, I don't know. And I'm like, well, that matters.
Yeah. No, it's confusing, and it's you're exactly right. It's if you don't get it right, you're doing the exact opposite of what you wanted to do.
Correct.
And it opens yourself up to potential, like, if you're selling to open a call option and you think the stock is going to go up, and then
all of a sudden
go up a lot, now you have unlimited risk.
Yeah, exactly. My first kid with a lady name, since she lost the plot.
Lost my job.
I don't really think that's a question.
Yeah, I'm not sure how to answer that one.
Yeah, so let's do this. So I think the ones that are most common for at least most people are going to be buying calls. So you buy to open a call, right? Mm-hmm. That means you're bullish on the stock. You think it's going to go up. Right?
Yep.
The other bullish thing is when you sell a put, right? Yep. So you sell to open a put, which means that you are willing to buy it and for anything below, basically, right?
Yes, although selling a put, the risk-reward dynamics of buying a call and selling a put, while they represent the same side of the trade, so they're both bullish, they're both sort of profiting when the stock goes up. Selling a put has unlimited risk if the stock then were to go
go
the
down.
downside. And it's not, I guess it's not technically unlimited.
It's
the
to
difference
zero.
between the stock price and zero, but like,
Yeah.
that's usually.
So if you're selling Tesla at, I don't know, what's Tesla at now?
270 or something.
Yeah.
Like that.
So if you sell if you sell a put at 2 something and it was to go down to 110, you are going to take on a huge amount of downside. Right. But if you think that the stock is going to go up over the long term, selling puts tends to give you at least a pretty good idea of for example, for me, when I think of something's at near the bottom, I sometimes will sell puts. Like I have a position in DTC, Solo Brands, and I think that the stock's not going to go lower than 250. So I sold a whole bunch of puts at 250 and some at $5 because I think the stock price in the next couple months will go up above that.
Yeah.
That's when selling puts would make sense.
Right. If you think maybe if there's a volume shelf or, if you think there's some sort of
strong support
mechanism support, at a certain price, it would make sense to sort of sell around that price. But again, just understanding sort of the risk reward mechanisms are much different.
And then selling calls, if you think that the stock's going to just kind of hang out in like a channel or like it's not going to run too much, you can sell calls and collect premium.
Mm-hmm. And the other thing about selling calls is what a lot of people will do is covered call positions. So they'll have a stock price, say they have, or a stock position, say they have 100 shares of Apple. You can sell calls above where that 100 shares of Apple and essentially collect that premium if the stock never reaches your call strike. Or if the stock does reach your call strike, it essentially just collapses your position and then you make that amount on the stock increasing from your position. So covered calls are a pretty common way for people to do that, and they're pretty popular among people. But you need
capital.
Not only a stock position, you need a fairly big stock position to be able to do that.
All right, I see some questions now.
Yeah. So when you sell to open, Tom, you're exactly right. You can buy it back at any point, and that's for buying to open or selling to open. Either one, you can close those positions at any time. Don't need to wait for expiration. You can do that at any time.
Because that's how the Europeans do it, right? Like once you're in, you're like stuck. Is that right?
Europeans are wait for expiration.
Yeah. Okay. I've never traded European options, but I remember there was like some caveat, like once you're in, you're in.
Yeah.
Okay.
No, it's not. So you can European, you can't exercise early.
Oh, that's what it is.
You can trade out of them. Yeah.
Okay, gotcha. Okay, that's what it is.
Them early.
Good stuff.
Yeah. All right. So a couple more things to watch out for in terms of options. So we talked about sort of the unlimited loss positions on selling to open positions and short puts and short calls. Some of the pricing components are just, if you've heard of the intrinsic value or extrinsic value, intrinsic is essentially the difference between the strike price and the stock price. So if you're in the money, whatever that dollar amount that you're in the money by, that's an intrinsic value. Extrinsic value is essentially just the time value. So it's really time value plus volatility. So if you have a month left and it's a super volatile stock, you're going to have a lot of extrinsic value because you still have a lot of time for the stock price to reach your strike price. However, if your position expires tomorrow, there's not going to be much extrinsic value because there's just not enough opportunity for the stock to hit your strike price. So those are kind of the two components of options premium and options pricing. Again, expiration is just the date that something expires. You can exercise before that. A lot of times it just makes sense to sort of wait either to sell the position or to sort of wait until the natural expiration date. But things can be exercised before that. And if you are short a position, you can have something assigned, which means someone else exercised, and now you got assigned the shares of stock for your short position. So that's something then where you can essentially wake up and be short stock or long stock, depending on if you had a call or put, if something is exercised against you. So Now we're going to get a little bit into sort of what option spreads are, and then sort of get into how optionality uses option spreads. So there's a couple different types of spreads. The two that optionality uses are vertical spreads. So a call spread and a put spread. A call spread is essentially you buy a call and then sell a call on top of it to create a closed position. So you have a defined risk, which means you can only lose about what you paid for it. You don't have that sort of unlimited downside risk, but then your profit is capped too. The really nice thing about option spreads is that they are essentially, because you're selling a call on top of buying a call, they're subsidized. And they're much, much cheaper than just buying a call. So you could have a call that costs $5. So essentially, if you were to buy one position, it would be $500. But if you were to buy a call spread on that same thing, you could probably get it for, who knows, $50.
$50, yeah.
Yeah, because you're also selling a call on top of it. So it's a good way to essentially get into affordable options trades and still have a good risk reward. You do lose the unlimited upside. But in the vast majority of cases,
it actually protects you.
Upside. Exactly. It protects you and that upside doesn't kick in. So it's a much better proposition in terms of risk reward, and your break even point goes way down. You don't need, if you're paying $5 for something, you essentially need that $5 to be cleared and then you start to profit, versus an option spread, you're paying so much less. So you have less essentially cost to cover. So that's one of the major benefits of spreads versus single calls and puts. The other big benefit is when there's something that's super volatile and there's a lot of volatility baked into that price. If you're just buying a straight call or buying a straight put, you're paying for all of that volatility. And you sort of have exposure to all of that volatility, which a lot of times you don't want. On an option spread, because you're buying a call or a put and then selling one right kind of near it, you're sort of playing both sides of that volatility. And so you definitely don't have as much exposure as you would just buying a call or put. And so it sort of hedges you from some of the Greeks. And, I'm not going to go into delta or gamma or gamma, but you definitely have less exposure to those Greeks than you do just buying straight calls or puts.
And I think, just to, chime in, I think one of the most difficult part about option spreads today is just how to even structure these trades, right? And that's what we get a lot, is like, I would try option spreads, or I've heard about option spreads, and Anand, we talked about this, like just constructing these trades on your own. Like in most legacy trading platforms right now, you're looking at, 12 to 15 plus click setup, right? And at that time, maybe you missed your move, or maybe you are confused about the way that you're even setting it up, or did I even do it right once you did it, right? So a lot of that frustration in the setup process, that's something that we felt, as retail traders ourselves, and trying to figure out like a better way, and actually literally a better process of constructing a trade. So I think while option spreads are so attractive from a trading perspective, they're actually not very attractive from a construction perspective, at least until, obviously what we, try to build over here. So that's something that was a big piece of, feedback that we have gotten so far is, I would use option spreads if I knew how to do it. But I don't, even when I structure them, I don't even feel confident in what I just did. So that's what we, tried to create our own better process to do.
Yeah, and then I'm just going to get a little bit into essentially how we actually go about packaging those trades, what the menu actually looks like, and then Adam, if you want to get into the demo. Yeah. So what we do essentially is we have an algorithm that goes into the options chain. So none of our users ever have to go into an options chain. And then it finds where the stock price is. So it finds where the stock is trading. And then it actually creates option spreads based on where that stock is trading. And so it's an ever kind of dynamic moving thing. If the stock price were to go up $10, that menu would sort of go up with it. So it sort of triangulates where that stock is trading and then puts trades together that vary in not only strike distance. So we have some that are kind of one strike apart. We have some that are 4 strikes apart, but it also sort of stays, again, kind of near where the stock is actually trading. And it does that so that we're not ever getting too far away from that stock price. Then we put them in a menu and just organize them by risk level. So low risk, medium risk, and high risk, just to kind of frame, exactly kind of what the risk reward of those different trades are, and how they sort of compare to each other. The higher risk have a much less likelihood of finishing in the money, but the risk reward is much greater. The lower risk, the risk reward isn't as good, but they're usually already in the money. So we sort of vary not only in expiration date, we go out to 1 year, but also in strike distance and also in sort of risk level. So Adam, if you want to kind of go through the app, give a brief demo.
Yeah.
And I guess we could pause if anyone has any questions now, could do that, or Adam, you could kind of get into it, and then we could do questions at the end as well.
And we got 9 minutes before I got to restart the Zoom.
Okay.
No problem. That should be kind of like perfect timing.
All right.
Let's see here. Okay.
You should have the ability to share. I think I put multiple participants can share. There you go.
Let me know when you can see my screen.
I can see it.
All right. Cool. Let's do it. All right. So we'll just kind of start from the top. I wanted to keep this one kind of short because I didn't want to make it too comprehensive. But like right out of the gate here, this is actually like a revamped Discover tab. We actually just put this feature out maybe like 3 weeks ago, I'd say, maybe a little bit more. But yeah, so it's a pretty updated feature. We have a most traded section. So there's anytime a fluctuation between 5 and 10 of the most commonly traded stocks here on Optionality, commonly traded tickers. And then we wanted to do something that like we didn't really see on any other platform, or at least, it's not very common, like a 52-week high and low, right? Because a lot of people were kind of asking us like, well, what's it like all-time highs and what's it not all-time, but yearly highs and yearly lows, right? So we tried to pull those out and just create some, custom metrics for people that's like super easy to digest. You can kind of get a really quick snapshot of what's happening, at a 10,000 and then like a 5,000 foot view. And then back up to these most traded, we actually have like a kind of a cool little put call percentage within the app as well, based on the trades that we're getting with a bullish or bearish sentiment gauge. So that's something that we've gotten some cool feedback around. And then right down here, there's actually an earnings calendar that you can filter through that shows after market close or before market open with what earnings are coming out this week or in the following week, so you can kind of stay up to date within your position.
That's pretty good.
So,
nice.
Yeah, it's a new feature. Almost every single thing that we build into the app, we wait till we get feed. Like there's things that we do proactive, but any like big feature, we do a ton of testing and we make sure that it's like something people actually want. Almost 90% of the time, it's something that like our traders actually asked for. So people wanted to have a better source of discovery within the app and not have to go to some of these other tools and some of these other like research centers essentially online, and they wanted to be able to just kind of have like a one-stop shop in terms of research. So this is our first version of what that would look like for us. But at the same time, a lot of that information, Anon, as you know, can be like super overwhelming. So we still wanted it to follow along with our like very like simple, transparent, accessible user experience without it being like too daunting and too overwhelming for people to take a look at. So that's the Discovery tab. You can see it next, at the bottom here. It's one of our main features now with the little compass icon there. And then you can see that we'll just go ahead and click in SPY. Like everyone's always looking at SPY. And you can have your 1 day, 1 week, 1 month, 3 months, 6 month, and 1 year. And it again also has your high and your low within that time frame. That's a fully clickable chart, and it shows the percentage gain in dollars and in or loss and in percentage within that time frame as well. So let's just go ahead and choose our position. And this is our strategy. This is exactly what Alec was just talking about with the call spreads and put spreads, but you shouldn't have to know that terminology to be able to like choose a strategy. So we just pulled it out demystify it a little bit. I think the price will go up, or I think the price will go down. I think the price will go up is your call spread, and I think the price will go down is your put spread. You have some cool market stats here that you can expand upon as well, but let's just go ahead and say I think the price will go up. And then this is our menu that Alec was talking about. Again, people tend to gloss over when they see an options chain. I actually cannot see the YouTube right now, so I don't know if there's anything else coming in or questions or, hey, stop, or look at this or whatever. So you guys should just let me know.
No, Alexander just wrote, take my money.
Gladly. And by Alexander, I'm assuming you mean Alec Baum. I'm just kidding. So S&P up here, let's confirm what you want your strategy to be. I think the price will go up from, that's the current stock price. The arrow is your strategy. So I think the price will go up. Again, it's a call spread. And then show me spreads that expire in 1 week, 2 weeks, 1 month, 2 months, 3 months, 6 months, out to 1 year. We are always, this is updated, as quickly as the market update. This is updated by the second. So anytime you're filtering through a different expiration, again, you're not digging through that chain. You're not digging through these different dates. It's just repopulating the menu beneath it based on those prices at that expiration. And so now you can see below it at expiration, Friday, September 2nd. Obviously, this was reported about a few days ago. So 9 days, it calls it out exactly how many days that will be. And we can actually, go ahead and filter out to 1 month. So let me back up here for a second. So right here, this is something that's kind of important. Our lower risk bucket, usually the first two are already in the money. So Alec, if you want to explain kind of like the process and like the way that these are structured, this is something that I find super useful because I didn't know, or I wouldn't know to like look for these types of trades as a new and beginning options trader. So if you want to kind of just dive into some of this stuff and kind of re-explain that, I think that'd be helpful.
Yeah. You mean essentially just the benefits or sort of the nuances of a trade that's in the money versus one that's out of the money? Yeah. So, and the way I sort of think about it, which is it's different for everyone, but like, I guess the one thing that is true. So a trade that's already in the money means that if the expiration date were to be today and the stock price didn't move, then the trade would finish profitable. So it's a little confusing because like the stock prices are actually past where the break-even point is. And it's even past where sort of the maximum gain price is. So it might look like it sort of should be profiting, but essentially what that means is that if you enter that position, you don't even need the stock price to go up by the time that, and this is for a call spread, by the time that the expiration date comes. You just don't need it to go down by a certain percentage. So you can, if you think the stock's going to go up, not only, do you have sort of room if it goes up, but you just don't need to be wrong by a certain percentage. So it's a much higher likelihood trade. You're going to, if you continuously do those, you're going to win a lot more of those trades versus if you do stuff that's higher risk and you actually need the stock price to move by a certain amount. But the risk reward is going to be less. You're going to pay more and you're going to make less. Obviously, they're going to be priced higher because they are already in the money. So you definitely pay for it, but you will win a majority of those trades. You will win a lot more of those. I would say those are definitely more favorable for short-term trades because it's really hard to predict what's going to happen in a week. Anything can happen, but you're not paying up for, essentially you need a big move to happen within a week. That move already happened essentially in those in the money positions. And so those are typically good when time is short and, for longer positions when you can sort of afford to let things move and you can afford to kind of wait for an event or whatever the case may be. Some of those higher risk and sort of as the strike goes up and moves a little bit away from the stock price, those are probably more appropriate for, 2 week, 4 week, whatever, 2 month. So it is nice that, we kind of offer both so you can sort of play both sides of it.
Okay.
And I think the Zoom is about to.
Yeah, I was going to say, I'm about to give you guys a new link. Hold on 1 second.
Sure.
Okay. They're off right now. Let me start a new meeting. I am getting a scratchy throat. Participants, copy link. Let me give it to them. Everyone can hear me still? All right, let's see if we can get them in. I do need some scotch there, Shotty. I don't know if you guys could tell, but I had a couple cocktails for happy hour.
All right, I'm back in action.
All right.
Let me go back to.
Oh, wait, let me give you screen sharing abilities again.
All right.
There we go. You should be up now.
Cool. All right. Let me go ahead and try. You guys good?
Yep.
All right. Cool. So yeah, and like obviously, title wise, you don't need the stock to go up. You just need it to not, or you could just stay exactly where it is. You just need it not to go. You could just stay where it's at. That's why it's called in the money, because it's already in the money, right? So it's a pretty self-serving title there. And I think that like goes back to like affordability almost and accessibility. That you can see the majority of these trades. I mean, $60 to get in, 100, 150, 57, 110, 65, 53, 105. So our average trade cost, just so you guys know, it's usually between 30 and like $75, 30 to $60, just depending on the stock price. But it's pretty. That's kind of intrinsic, as Alec was saying, to option spreads. So it's super helpful and kind of the word is leaving me right now. But subsidizing the actual trade price. So a lot of them are, between $30 and $75. So that entry cost, that's how much it is to buy into the position. Your max loss is going to be right around that as well. And then your potential gain obviously being over here, and your money multiple. So this times this is obviously this. And then your break-even price of the trade is right here. So we try to make it as user-friendly as possible, laying out the expiration and then even filtering them by risk tolerance. So if we move into the medium risk bucket a little bit, you can start to see that now a move needs to happen within this time frame, right? So for this trade, it's again same expiration because we didn't change that expiration toggle. $57 to make $42. Break-even price is now $14.57, which is above where the stock price currently is. So you need a 0.22% move to get that potential gain within that time frame. So we lay that out pretty clearly of what the actual stock has to do in order for you to reach that potential gain within that time frame. And then the higher risk bucket as well, 50 to make 47, 100 to make 95, 153 to make 147, going out to 1.19% move. Now, if we move forward from the menu, obviously, let's say you pick that one right there. This is going to kind of be your spread detail. So it kind of confirms again, where the stock's at, what you picked. This is the first time that you start to see call or put. We do want to educate people on the strategy that you chose. So now you'll start to see this language salted in, the actual option symbols that you're buying and selling, and then the expiration again. And you can now change the number of spreads that you actually want to buy. So a spread, again, is made up of a buy and a sell contract, which gives you that defined position. So here, you can actually go up to 10 spreads. I think this example will do it up to 3 or 4 or 5 or something like that. But you can see that the actual potential gain and potential loss is multiplying times 5 within that. So you're actually doing 10 contracts within a 5 spread, within 5 spreads of this trade. So break-even price is obviously going to be the same, but now it says your potential gain is $225 instead of, let's see what it was, instead of $45 because it's multiplying times 5. So now it's $225 if the stock increases to 417 or higher by expiration, and then if the stock decreases to 416 or lower by expiration, your potential loss is 275. So just because you see something on the menu, that doesn't mean you can't do more of it. It's just that's what's offered within the menu, and you can actually set up your multiple here. So you can do up to 10 spreads, which would be 20 contracts, and then go ahead and execute the trade. So you're really looking at 5, maybe 6 clicks from the point of discovery. So when you actually, this is the process again, we'll just let it rip. When you choose your stock, look at your chart, filter through it. I think the price will go up. Hit that, pre-populates the menu, go through your expiration, figure out what trade resonates with your personal risk profile the most, and understand what your max gain and what your max loss will be before you actually execute that trade, which we think is obviously super important for people to know. And you hit execute. So it's again 5 to 6 clicks versus 12 to 15 on the legacy trading platforms, Webull, Robinhood, E-Trade, Fidelity, Schwab, all those guys.
Yeah, so I wanted to basically explain to people that are listening kind of why I think this is a great tool. And it's because the majority of options traders, they're betting on usually one side. And so when that happens, you can, with the, like, for example, the Wall Street bets people, like they'll go completely on one side of the trade. And if it goes sideways, they're screwed. Like they just lost all their money. With buying a call and selling a call, you're limiting how much downside you're going to be able to see. It also caps your max gains, but at the same time, the majority of people, if they win on options, that's rare, right? Is there some stat that says basically like 60% of all options are like losses for retail if it's not higher than that?
I don't know what the exact metrics are, but it's something like that.
Yeah, it's like super high. Like it's like the majority of people lose money on options.
Yeah.
Because like, with Max Payne, like they have all these different tools, and obviously that's like part of the overall market stuff that we could probably cover. And many of the people that have been in here listening and talking in the Discord understand market makers are incentivized often because of the options chain, correct?
Oh yeah, I mean options are a huge profit center for market makers, and that's sort of again, I think a lot of it goes back to sort of what I would call like the sexiness of just buying a naked call or a naked put is like, hey, if this stock tanks, I can make unlimited profit, or like, hey, if this stock shoots up, like I can make unlimited profit. Like that's a great proposition. Why would I not do that? But that so rarely happens, and you're paying a lot for that, and you're sort of one-sided exposed to all of sort of the underlying mechanisms. Whereas in an option spread, true, your upside is capped, but again, like sort of as I referenced earlier,
so are your losses.
Yeah, so are your losses, but also like that break-even point is so much less than what it was, and so you don't need a 5% gain, right? Like you don't need some crazy gain in the stock to where like, even if it, you could technically make an unlimited profit, but like that's
but that never happens.
Very rarely happens.
It never happens.
Right. Versus like an option spread, like you need a 0.5% move in the stock or a 1% move in the stock, or you just don't need it to go down by a certain amount. And so it's a much better risk reward dynamic, even though on the surface it doesn't have that sort of like, really
sexy.
Not as sexy. Yeah.
Right. Oh, I can make any amount of money, like it's not that, it doesn't have that lottery ticket feel, but it's a much sounder trading choice or investment choice.
Yeah, because I was going to say the majority of people, it kind of takes away also, doesn't it kind of eliminate a little bit of theta decay?
Oh yeah, for sure. But I mean, all of the Greeks, it just because you're playing both sides of it, it doesn't completely eliminate them, but it really, really almost completely reduces them.
Because at that point, because that's what most people, when they're trading, they're like, oh, I think the stock's going to go up. But what they do is they buy a naked call. And so even if they're right on the direction, a lot of times market makers will kind of pin the price. So they'll kind of keep it like midpoint, during the week. And then at the last minute, they might push it down. So basically, by the time you get there, even if you were right and the stock went up, theta killed you.
Right. You needed to go up by a certain amount, right? It's not enough that it just went up. It needs to cover what you paid for it.
Correct. Because the premium.
comes into play is because like, oh, well, you know, depending on some of the factors, how much it costs, where you bought it, that sort of thing, like you needed to cover that full amount of your premium. And if it doesn't do that fast enough, like, well, it doesn't matter that it went up. Like, that's great that you had that call, but like,
Yeah, you just lost money.
right, you just lost money. And so that's where those spreads really, again, like you need a very, very minimal move. And like, that's one thing that, you know, we're cognizant of with optionality is offering trades that are already in the money. So you don't, like the trades that Adam's showing right now, like you don't need those.
Yeah, you can just stay where you are and you'd make money.
Stay where they are or not go down by a certain amount. And so it really, your room for error gets so much greater because you don't even need to be right on the direction. You just need to be not wrong by, you know, some percentage.
Correct. And that's why I think what you guys are doing is really smart for especially newer options traders because literally, like, you're eliminating half the reason why people lose their shirt, which is they only go one side, and then when they're wrong, even if they're right on the direction, they usually overpaid because they get baited. You know, the stock starts flying up. They buy when the IV's the highest, and then they get absolutely killed by Friday.
Yep.
Because they bought it on Wednesday when these guys baited retail into basically buying all these calls, and then they push it down like a week later, or, 2 days later, and they basically, even if they were right on the the stock price going up, they got killed on theta.
Right, and they paid more for it because they're just, again, they're not subsidizing it with the call on top, so they need more. They need the stock to go up more, and they're paying more for that. So, in a losing trade, they're losing much more money than in a spread.
Yeah, so I just wanted to point that out. That's one of the reasons why I thought this was a great tool for retail, especially just because, like, you guys are doing something that nobody else is doing, which is pre-packaging these things and kind of making it really easy for people to basically just go, well, I think the stock's going to go up and not have to worry about, like, theta, because theta is what kills the majority of options traders.
Yeah.
So I just, the reason why I don't endorse many things, but I think this is a really smart thing for a lot of, like, even like people like me. Like, this makes this easier for me because I don't have to go through all the things. I can just be like, all right, well, I'll just go to optionality and throw like a couple clicks in, and then I'm good.
Yeah, no, and that's one of the things that we've found as well is, like, we have people that are beginning traders that utilize this and that it's really helpful for, and that's sort of like where it came from, but like, I use it myself. I think it's extremely helpful. And we have people who are pretty, like, extensive in their market knowledge that are pretty advanced.
Well, didn't you say you have a guy that was doing, like, butterfly spreads and some other, like...
Yeah, he was doing, like, he was doing a couple of these different spreads on sort of different sides and was sort of, like, creating defined positions within themselves. But we have people who have really pretty extensive knowledge that it's because these are listed out in a menu, because they're listed out in such a convenient fashion, and you can compare to 8 other trades, and you can execute them in, a third or a half of the clicks on other brokerages. Like, it's just a lot easier. So we have people who, can put them on themselves if they wanted to, but it's like, why would I do that when I can not only see every single option that's available to me, but, like, I can also put it on extremely quickly.
Yeah, I mean, I think what you guys are doing is great. Like, I still want you guys to open the brokerage side so I can also trade common shares through you. But
yeah,
soon enough.
Yeah, you guys have to build to that point. But how about you guys in the audience? You guys have any questions?
There was 2 earlier, and I just want to make sure that we answered those. Can you guys run through and explain the different strategies available for different risk levels? So I think awesomeness, dude. I think we got that. Let us know if we didn't, or if you need further clarification. Any plans to have optionality shares listed on NASDAQ in the near future?
Hopefully.
I hope so.
Yeah, no, probably not in the near future. But yeah.
How much money do you have to do that kind of stuff?
It's not about the money. It would be about the growth, and it would be about, like, what the user base is.
Oh, you're saying, like, if you guys were actually to go, like, public.
If we were to go public, yeah.
Little IPO action. John Bickerton. I just like to listen. That's lovely. Feel free to sign up on the Discord link that we posted. And yeah, and for those of you that missed it earlier, before we get going here, we went ahead and we're doing a $40 promo after you guys place your first trade. So Anand, you'll actually like this. We actually just revamped our sign-up flow, so it's a little bit more frictionless, I guess, as frictionless as signing up for a brokerage is. Just a reminder, like, we obviously are a brokerage. You can place and execute all your trades on here, just like Fidelity, Schwab, Robinhood, Webull, eToro, same thing. So signing up for us is the exact same thing as signing up to there. So it is a KYC process and some personal details. You link your bank account. We use Plaid, just like a lot of the big guys. So it's very, very similar process. So you can just follow that link directly and sign up, and that way we can get you guys your $40 after you place your first trade. You can actually just go right to our website, optionalitytrading.com, and text yourself the app, or you can search us in the app or Google Play Store. We're available on iOS and Android. And yeah, I mean, are you guys PFOF? Are you guys paid for order flow? Yeah, we have a user-facing commission of 50 cents a contract, which is slightly less than like a Fidelity, Schwab. I think they're 65 cents a contract. We have payment for order flow that we split with our clearing broker Apex, which is the same back end as Webull, Gatsby, some of those guys. So we do split that, but we route on best execution, not who's paying us the most, which is a very important distinction.
Yeah. I was going to say, because I asked them a bunch of questions on this, and I think the payment for order flow for common shares is a little bit different than options. And Alex, if you want to kind of cover that, because I feel like that's something that I learned from you, which was options, while obviously very dual-edged sword, are probably more fair than the commons.
Yeah,
the common shares.
The commons essentially, they can get internalized, so they have orders that, if you place a common stock order, a market maker can essentially take that order and say, oh, I have this inventory, boom, I can pair it, and it gets executed off exchange or in a dark, not a dark pool, but just
off exchange, yeah, OTC.
Off exchange. Whereas options have to be executed on an exchange, so there's no internalization. So the mechanisms of that are a little bit more fair. Like the price improvement is a little bit more real because it's not like there's this huge amount of volume that's not sitting on an exchange. So you're like, quote unquote, price improvement is like, getting 20% off of something that was marked up 50%. That's the way it is sort of on the common share side. On the option side, it definitely is a little bit more of a fair game. Now, it's still 100% on the brokerages to do the right thing and say, I'm going to route this to someone who's going to really focus on the best execution and not, just giving me the highest payment for order flow. So that 100%, like, the actual broker still needs to be doing like good by their clients, for sure. But as far as the actual mechanism of the payment for order flow itself, definitely more fair on the option side.
Yeah, and that you guys only do options right now.
We only do options right now, as
but
it is. Yeah.
You guys did talk to, what was it?
I talked to
IAX.
The IEX. Yeah, we had just a discovery call with them on what that would be from an implementation side.
And they do Midpoint, right?
I'm sorry.
They do Midpoint as their starting,
yes,
right?
They have. It's like the coolest product ever. It essentially is like midpoint trading, and so it's all about like executing at the midpoint. And they have actual orders, which I've never seen before. They have like midpoint orders. And so you send it in at the current midpoint, and then it essentially just follows around what the midpoint is until it executes, which is usually, it's quick. But like, it's not a limit price where it's like, oh, shoot, I missed the midpoint by a cent.
Yeah.
Right. And like now my limit order, and you could definitely miss the market that way. This sort of follows around midpoint, so you're getting a fair price. And their whole thing is like, midpoint is fair price, and like that's where people should be executing.
Yeah. Whereas like most of these other brokerages were basically like internalizing and taking. I was thinking more like Robinhood and like some of these other like. Yeah. Well, we need to speed up our executions for these trades, and it's like, oh well, we did not get the best price.
Yeah, yeah.
That's the problem with payment for order flow, right? Like, oftentimes,
100%. Well, and so it's sort of like it incentivize if a broker's model is payment for order flow, if that's like their main revenue model, which ours is not, but like then they're incentivized like, oh, we need to increase revenue, like we need to really make sure this payment for order flow is working for us. And so it's just a misalignment of incentives.
yeah, you're basically incentivizing the wolf that's watching the hen house.
Exactly. And so it's like it just is not. It's payment for order flow on the option side, I'll say, doesn't have anything wrong with it from a mechanistic standpoint other than sort of from the brokerage side. If that's their main source of revenue, it definitely can encourage like unfair practices. On the equity side, it's a mess. And
Yeah.
I think internalization.
There's
I
no
think
price discovery when you can't even allow retail traders to trade their, common shares. Like, you basically just have a bunch of big guys playing around with the shares.
Yeah, for sure.
Julie had a question for you. Do you guys have directed orders or just payment for order flow?
By directed orders, Julie, do you mean
Probably commons.
common shares?
That's what I'm guessing. Julie, do you want to clarify?
Yeah, so all of our trades go through Apex through their sort of routed mechanism. So they all are subject to that sort of payment for order flow. You can no, so we just and in terms of the actual trades themselves, they're all spreads that we have right now. We are looking into sort of number one, expanding strategies in terms of expanding different spreads you can do. We're also looking into sort of the common shares thing.
Yeah, because then you can sell covered calls and other things.
Right. So none of those are sort of like on the horizon. They're not like coming up soon, but those are all sort of like long-term strategic plans of having more products, more things available to trade.
Yeah, Julie, for right now, when they started, they basically were just doing spreads. So call spreads and put spreads, right?
Yep, call spreads and put spreads.
So that's all they're doing right now. It limits how much downside, which is probably a lot safer, and it kind of eliminates. All you have to do is sometimes be right about like either if it's deep in the money, like the green ones that you guys showed on your app. Then all you have to do is basically have the stock not go down like $2 a share sometimes, or in the case of, I guess, for like some of the medium risk and higher risk ones, it just limits how much money you can lose, whereas naked calls, you can lose a ton.
Yep.
So that's the reason why I like their product, is just because a lot of newer options traders and even some medium and like advanced traders, it's for the advanced ones, it's more just like ease of use, and for the newer ones, a lot of times people are right about the direction, but just get killed on theta when they are naked. So,
Yeah.
And then the other thing I'll say just about if anyone, we had this question last time, Apex's sign up flow is sort of off from like 8 p.m. to like 3 a.m. So it just, and by that, it's just you won't get an instant approval, whereas like during actual hours, you will get an instant approval. So
if you fund it tonight, basically.
Right. So if anyone does sign up tonight,
it won't clear until the morning.
You won't clear until the morning. Yeah. So it's not like the application's in review or you got denied or whatever like that. It's just
because you guys are options, you won't be able to do anything until the actual start of the day.
No. So actually, it's just that's a sort of a blanket thing across Apex.
Okay.
They take like a sort of a break from like I think it's like 7:30 p.m. to 2 or 3 a.m. It's not approval. It's not instant approval.
Gotcha.
They sort of turn the instant approval back on at like 3 a.m.
Okay.
So we have people who sign up at night who on the support email will always get questions about like, hey, why did my account not go through? Like, hey, what happened in the account sign up process? That's just a function of
So if they sign up right now, it won't happen until the morning.
If they sign up right now, yeah, like by like 3 a.m. the account should be approved and good to go. And then the nice thing is, once your account is approved, like same day you can fund and start trading. You don't have to wait. We have instant deposits, so you don't have to wait for funds to clear or anything like that.
Instant deposit up to $200. And Anon, if you want to post the link.
You're going to raise that limit so I can put more money in?
You
The
can
instant
put
deposit,
more
yeah.
money in. You can put more money in
It's
now.
just
You just
yeah.
might have to wait.
I know. I had to wait a day then.
Convenience, I know. But yeah, if you want to post the link for the sign up in the YouTube chat, it won't let me do it.
It's this form right here.
Create a channel. Yep, it's just the form. You want to throw that in there. That way we can make sure everybody that's
All right. Did
here
you guys see that?
Yeah, we got it.
Okay.
So yeah, Julie, yeah, would love to have you check it out. And overall, like, we're very open to feedback. I mean, that's like how we've built this from the beginning. Alec and I were just traders like you guys, and we said, hey, like, this doesn't really make sense, and we want to kind of make something better. So we just went out and built it. Obviously, it took a lot of time and resources to do it, but you know, this is our. We've only been in market really for
Couple
the
months.
last few months. Yeah, so we're really just starting to get warmed up here, and we're super excited to see the growth that we have, get the feedback that we've gotten. Super appreciative of your guys' time. And Nan, again, thanks for having us on. Happy to do this whenever. And we're also part of the Discord community. So like, if you guys have questions or things pop up, or like, just tag. You know,
They're part of the retail collective, so you can tag them.
Yeah, and we're happy to answer, you know, questions there. Or obviously, email support, or, you know, pick up the phone and give us a call on the support line. We actually answer our phone, which is pretty funny. People like cannot believe that, like, when they call our support line, there's a human on the other side. They're like, wait, is this option? We're like, yeah.
Yeah,
like, holy shit.
you guys are small.
Yeah, we can do that stuff. So
Yeah,
it's
you
like,
can
it's
still
kinda
do that. Where we're like, yeah, I'll answer the phone.
Yeah. So exactly. So we appreciate your time. Obviously, it's, you know, after 10 Eastern. So always appreciate it. Always love being here. And then hit up that link. We get you guys the $40 first trade promo.
If we're going to do this again, I think we don't compete against NFL football opening season.
Yeah, I mean, listen, we're always going to be competing against something, but tonight.
But yeah, especially the opening night.
Yeah, that's all right. That's all right. But no, thank you guys so much. And if there's any other last burning questions, we can take them now. If not, post them in the chat and we can get them answered, you know, within the next couple of days. But yeah.
Good stuff. All right.
Awesome.
So
Thank you, everyone.
Yeah, thanks so much, guys, for coming out and hanging out and answering questions. Let's schedule this again, and then we'll do it probably on a night that's not football night.
Yeah. Sounds good.
Perfect.
Awesome.
Thanks.
All right, and Adam, congratulations again, buddy, and enjoy the wedding.
Appreciate that. Yeah, thank you.
Alec, I'm guessing you're probably in it, right?
Yep.
If not, he's a
Yeah,
dick.
I'll be there. Whispering in Adam's ear, don't do it.
All right, guys.
Yeah. All right. See you, everybody.
All right, have a good one, guys.
Thanks again.
All right, bye-bye. All right, can everyone still hear me? That's all 13 of you that are left. Man, oh man. I'm going to get killed in fantasy football. 2 carries, no yards for my second running back off the board. All right, so who's still with me? Laugh out loud. No, I can't hear you. Can you hear me? Hello, hello. Testing, testing, testing. Hello. Can you guys hear me now? Don't joke. Come on, man. I'm sitting here, I'm like, I screwed something up on Zoom. Okay, we can hear you good. Okay, I was like, I messed something up on Zoom, and now we're gonna... All right, you guys want to talk about any tickers? Back to the normal format. Yeah, I mainly want to give these guys a platform, not only just because I know Adam, but also because, like, honestly, I think the fact that call spreads and put spreads limit the downside, you can still make good money on it, and not have to it's so much less risk. That's the thing. If imagine this, if you had bought calls and also sold calls back when when it ran, when Ethereum ran, you would have limited your losses because it would have basically been so if your calls are going down but your sold calls are going up, it basically limited how much risk you had. So this is a strategy that I think a lot of people will probably want to do in the future, and so especially as more people get familiar with options and get better with them, these are the types of trades that all you have to do really is be right on the direction, because when you basically put a spread out, you're eliminating a lot of the Greeks, so you don't have to worry about as much. You can basically just worry about the delta. So APRN. Did APRN have a good day? Yeah, I think they did, didn't they? 16%, 16.69%. That's a good day. That's a good day. And they've got those warrants, I believe, at, was it 15? Was that we established? And I think I said this stock can probably run. I'm not in on it just because I'm kind of I've got a bunch of money in other positions that I'm kind of stuck right now. But yeah, there's warrants at 15. So, they could be running up and trying to hit those, So, they do need cash. That's the biggest thing. But, seeing they got a shelf registered, and yeah, I mean, they may be going after those $15 warrants. So, just wanted to. So I totally forgot to finish signing up. I thought I did. Now I tried to sign into the app and I'm locked out trying to reapply for a month. Just tell those guys. J Sharp and J Tooth on the Discord. I think it's J _. I'm pretty sure that's right. It's J _Tooth and J _Sharp. So those guys are both in there. But yeah, it's not underscore, just J Sharp, and I think the other one is J. It's J _Tooth 22. So that's what their two handles on Discord are. Just do an @ to them, or just DM them, and they can probably help you out with that awesomeness. So, yeah, I was going to say, APRN's got a chance to do pretty well. Now, you're starting to enter into this hot zone, right? So we've broken through, this was previously an area of resistance. They broke through this. Let's see what tomorrow brings, but it's running hot already. So, obviously, it would have been better to probably, let me just double check something. I want to see if there's any gaps to really. Looks like there's a gap up here at 7 something. 7, roughly 7:30 to 7, I don't know, let's call it 80. So where are we now? So we filled that gap. So those gaps are filled now. Let's see, is there any other gaps above? Nope. I don't see any above. At least not in the immediate. How's it going, Jason? Nitro. Dirty, how you guys all doing? So I had, the reason why I had to push this back a little bit was just because I had it's a professional network group I'm in, and we had happy hour afterwards, so I had to push it back slightly. still able to put my daughter to bed and get down here and do the live stream with you guys. So that was good. Everything good with you guys? How's everyone's day? I know people in meme stops were a little bit happier just to see some green, even though it's not great, but sorry, I'm also taking a look at my fantasy team getting destroyed. This is not good. I'm watching my projections go just hugely down. Like, Cam Akers was supposed to have, like, going into this game, I think he was projected to have a fearless projection of, like, 15 points, and now he's projected to have 3. Oh, God. Not good. Not good at all. On the bright side, I'm playing against Matt Stafford, who's not having a great game either. So, all right. Thoughts on APDN? So, yeah, APRN I think can still run. I'd have to take a look at, but my guess is with the kind of the investor who owns all those warrants, he's going to want to get those things unlocked and he's got a lot of shares. So I would imagine he's going to try to push that price up, and he's got money. So, APDN. Okay, Applied DNA Science. I did hear this stock. Was this one of the ones that was mentioned? Did we talk about this yesterday? I think it. So I told you guys I'm worried about this gap here. So gaps tend to fill, right? So you had a slight down day today. This looks like it's been kind of chilling, but if you look here, you're still. Excuse me, you're still down on the CCI. It looks like you are chilling with the awesome crossing over negative. So I'm worried about this gap here, this pretty large gap. So you had a run up, you had earnings, and now since then you kind of just been like chilling and consolidating. Slight down days here and there. So the earnings didn't look horrible, obviously, because the stock didn't obviously tank. But at the same time, you're looking at it from here going, well, you left a pretty sizable gap. At some point, they're going to probably want to get down there and fill that gap. That gap's pretty significant. So, let's see. Dilution. This is Dilution Tracker for anyone who's curious. All right, so let's take a look at their dilution. They're fine on cash right now. They don't really need the cash. They do have a July S1 offering, though. Warrant coverage 200%. So they've got a couple warrants here for $4, it looks like. And then they've got some here at 280. Those are canceled, and then the shelf is here. So there's a decent amount of dilution on the table. So it looks like they've got another 7 million warrants, which is almost 3/4 of the float. So if you add that 7 million, you have now gone from basically 13 million to let's just call it like 20 million. So if you're long on them, I would look at possibly buying it down here where the gap fill is, and then you can go long at that point pretty safely. There's not a ton of institutional ownership on this stock. And in fact, if you look who's the number one player there, it's Armistice, who is known to kind of pump, and they just did it to Ethereum, if you guys remember. So it wouldn't surprise me to see it run up and it kind of already did, and then see it dump down. So that's what I'd be watching right now. Because warrants are unlockable at what, $4, and the stock price is $278 now, but it was up and over. Make sure, yeah. Oh, that's APRN. Here we go. Yeah, so $4. So they brand the stock up to basically almost $5, and then this is probably them issuing out. Now we won't know until the next filing, or at least somebody updates. But it looks like they pushed it up to unlock some warrants, and now they've been slowly diluting, which is why you're not getting a ton of price movement up and the volume starting to die down, because you had a couple million here, a couple million here, and then since then you've only had this 1 day of volume, and since then pretty much nothing except for this one. So that's my thoughts. I just wary of this right here, this gap, because at some point you know that's going to fill. Could take months, whatever, but all right. Well, we only have 10 people on here tonight, and I'm going to try to catch the end of the game. You guys have a wonderful night, and I will see you tomorrow. And if you have any questions for me, just hit me up on Discord. I'll leave a link in the... here, let's leave a link now. We'll leave a link to the Discord. It is free if you want to join us and talk stocks and hang out with us. We usually have a pretty good time. Here we go. And paste. So you guys have a great evening, and I'll talk to you guys next week. Or sorry, tomorrow. And then if I'm not streaming tomorrow, I'll talk to you next week. You guys have a great night.